The Fed is set to kick off a two-day policy meeting today. This comes as the market faces a tech stock sell-off that was sparked by DeepSeek's advancements in AI, or supposed advancements. We're still looking into all of this. On top of this, we are expecting earnings this week from tech giants, and there are a lot of moving pieces to all of this. So let's bring in Ed Yardeni, Yardeni Research President. And Ed, you are really good at taking a lot of moving pieces and trying to figure out how to make sense of them. So good luck. Here's the mess from this week. What do you do?
Well, I think you just stay put in the stock market. I think the Fed's going to stay put. I don't think the Fed's going to be lowering interest rates for a while. The economy is doing great. We're seeing evidence that even the manufacturing sector, which has been in what I call a rolling recession, is now in a rolling recovery. So that's looking pretty good. Consumers are spending. And back to the stock market, I think what happened is what is happening in the AI market means that competition is increasing, and competition is a good thing for users of artificial intelligence, which means that while some, maybe just one of the Magnificent Seven may have some challenges here, the reality is the S&P 493 are going to be beneficiaries of very powerful and cheap and readily available AI technology. I think, by the way, some of the Magnificent Seven, like Microsoft, Amazon, Google, they're all going to incorporate AI into their technologies, into their products already. They are doing that, and that just means it'll be an upgrade cycle to a lot of the software, and they'll be able to charge a little bit more. And so I'm not crying. I'm not crying for them. I think they'll do fine.
Yeah, and I think the question becomes if this is a good thing from the broader perspective, does it validate the pullback you've seen in the one that really has had the MAGA 7s that has seemed like it has a problem just in the last 24 hours? That's NVIDIA. That's a really big pullback. And I guess you could argue that the market was really valuing things on this perspective of this was going to be a stranglehold and nobody else was going to be able to make any progress with it. Or do you look at it and say this is going to increase demand for their chips too, broader applications? Yeah,
well, that's the thing that always kind of kills these speculative bubbles that focus on monopoly pricing, monopoly marketing. The reality is no industry is more competitive than technology. These companies literally eat their young. What I mean by that is they create something new and novel and have a very high profit margin, and they themselves start working on the next generation, knowing that they're going to obsolete what they just put out, because if they don't do it, somebody else will do it. And we've just seen an amazing example of that here they thought they were going to have to spend tens of billions of dollars, and that would give them a monopoly position in the AI market. And some startup in China came up with DeepSeek, and whether it's can deliver everything that seems to be promised, the reality is it does increase competition. And even NVIDIA very graciously said, hey, this is pretty cool. And by the way, you're still going to need a lot of our chips. Maybe you don't need the high-end chips with the high margins. Maybe you can do it all with low-end chips with low margins. That's not a bad thing for the economy, certainly.
Maybe that increased competition will mean that you are still going to see a massive amount of CapEx spending because you can't afford to fall behind when it looks like it is such a hot foot race on this. But it could change where some of that money is spent. And I guess I still go back to the same question. The big sell-offs that we saw, not just with NVIDIA, but with Broadcom, with a bunch of the energy companies that were down by more than 20%, whether it's Constellation or GE Vernova. Are those buying opportunities to you when you see this, or were those stocks that were, I think, as you said it, this bubble, speculative bubble type of territory? How do you measure it?
Well, some of the monopoly valuation multiple has been kind of re-rated, right? It's come down some, but I think these are still amazing companies that are going to continue to have quite a bit of demand for their products. If anything, this makes AI more accessible, means it'll proliferate faster, and we're still going to need the data centers. We're still going to need the energy. So I don't think the story fundamentally changes. It just becomes more competitive. Maybe there's some pressure on NVIDIA's margins, but that's been adjusted for basically in one day. And I think from here on, these stocks and the overall market will be driven by earnings. And I think more and more of those earnings are going to be associated with a rising profit margin thanks to AI and other technologies. AI is not the only game in town. There's automation and robotics. And by the way, all these technologies interact. So look, Becky, I think we're in a digital revolution. I think we've been there since the IBM mainframe in the 1950s. And the digital revolution just continues to roll on here. We are processing more and more data, more and more, faster and faster and cheaper. And that's what it's all about.
Yeah, and I think that's a valid reflection and way of looking at things. We saw a big sell-off yesterday in the NASDAQ, but it was only the worst day we've had since December 18th. So this is not...
Put it in perspective.
Yeah. And by the way, we're still only 4.5% or so off from the all-time highs for the NASDAQ, less than 2% for the S&P. So you're talking about really relatively high stock prices across the board, and these are
not even a correction, really.
Not even a correction, correct.